All right. Hello and welcome to 2025 predictions for the Office of the CFO. We have a great presentation prepared for everyone today. So thanks for taking time out to join us. We will get into just a couple housekeeping items here in a second, but BC, if you want to advance the slides, I'll take you through a quick preview of what the agenda looks like for today's session. So we'll start off with just some housekeeping and introduction to the team. And then we will get into really what's driving some of the trends that our experts are predicting for 2025. So a few of those, spoiler alert, are going to look like AI, automation, payment optimization, risk management. Lots to dive into there. And we, have been collecting your thoughts on questions that you wanted us to address, and we'll do our best to answer some of those that you submitted with your registration. And we're also going to do some audience Q&A at the end of the session as well. So please feel free to submit your questions. We want to make sure that we're addressing what's hot and topical for you as well. So on the next slide, I'll just go through a couple of common questions that you might have. So first off, we are recording today's session. I've already had folks ask me whether we're recording. The answer is yes, and we will have a link out to you as soon as possible in our follow-up emails. So keep an eye out for an email from Amy at centime.com. She will have the recording for you probably within the next 24 hours. Like I said, we are taking your questions live, so include that there. I also encourage you join the chat. Please let us know where you're dialing in from, and we can get the conversation started. I know one of the best ways for us to learn in some of these educational sessions is from each other. So feel free to, weigh in and give feedback throughout the session. I am going to actually right now launch our very first poll that you can respond to while we're in session. Or while we're getting the conversation going. So that is live. If you don't mind responding to that while we chat, that would be appreciated. And with that, I'm going to one more slide of housekeeping from me, which is who's on the panel today. So I'm Allie Collins. I'm the Chief Marketing Officer here at Centime. I'm not the expert that you want to hear from on these topics, but I'm just going to shepherd the conversation along and make sure that your questions are getting answered. So that's what I'm here for. But more excited to introduce BC Krishna, who is the CEO and founder of Centime, where I work. And he's going to be talking a lot about some of the trends coming up as it relates to cash management and AP automation. We also have Yash, the CEO of Fyle, and we're really excited to have him as a panelist today to talk to us a lot about some of those trends and specifically as they relate to expense management as well. So with that, I'm going to turn it over to you guys to get to the fun part.
Thank you so much, Allie. And I have to say, I'm not the expert either. We'll just make stuff up as we go. And hopefully
that's the definition of expert these days, is making it up as we go along.
Yash, go ahead and introduce yourself and we'll dive right in.
Yeah, hi everyone. Again, really nice to chat. I think this is going to be a discussion. Just to introduce myself, I'm the co-founder and CEO at Fyle. At Fyle, we work with small and medium-sized businesses to help them leverage the power of real-time transaction data to help them achieve a faster month-end close and faster reconciliation on credit cards. So yeah, that's a little bit about me. Excited to sort of spend the next 45-50 minutes just talking about interesting stuff that we hear from our customers.
And I think when we were preparing for this, we kind of spent a bunch of time together, talking about basically 2025 predictions. It's always fun to start a year looking ahead and pontificating about what is likely to happen. And two things always come to mind is that it's fun to do. Of course, nobody looks back at the end of the year to see whether or not their predictions were right. And we should do that as well. The second is that I always think about the prediction business as a little bit like, Stephen A. Smith's hot takes. It's always fun to do, and there's always tends to be somewhat outrageous and, takes that, basically make headlines. But what I wanted to do is with Yash is to really kind of less talk about like, hot takes that make headlines, but really reflect upon our collective respective journeys over the last several years and, highlight for you some of the trends that we're seeing in the marketplace more as trends rather than predictions. And in some ways, what you'll find is that these are trends that are logical and they may not be surprising. And you may well say, like, oh, what's the big deal? These are not hot takes. They're not intended to be hot takes. They're intended to put a fine point of things that are hopefully obvious. And really what we're trying to do over the next 45 minutes or so is to emphasize these things more than like, create some kind of, awareness about things that you probably already know. So without further ado, what we thought we would do is to just really get to the predictions right away, right to the trends right away. And then what we'd like to do is to set the context and the background for why we think we have a tremendous amount of conviction about these trends and these predictions. So first and foremost, welcome everybody. Thank you for joining. I am calling you and joining this from the wonderful city of Hyderabad in India, where I am temporarily spending time with our development center. I'm normally based in the Boston area, and I'm not trying to rub anything in, but it's a balmy 80 degrees here in Hyderabad. Uh, and uh, and so that's why I'm kind of dressed the way I'm dressed. And so, so please, as Ali said, let us know where you are and what it's like over there. And as we go through the conversation here, it's intended to be casual and informal. And also, don't wait till the end to ask questions. We'll get to it as we get to it. So let's dive in, right? So basically, what we wanted to do is to highlight 4 trends, 4 predictions that we think we have very high confidence on. Number one is that the Office of the CFO does a lot of valuable things for the company. And they run processes. The CFO's office runs processes, of which we'll get into in more detail. The processes that might relate to cash forecasting, it might relate to accounts payable automation, it might relate to T&E management, it might relate to month-end close. Historically, many of these processes, and even to this day, what we have found is that at most companies, most mid-sized companies, these processes are still very manual. Over the last several years, we are seeing that some of these processes have become more and more and more automated. That trend we think will continue. And the drivers are obvious, right? These processes are powered by software that is increasingly accessible to most smaller businesses. And they drive efficiency, they drive cost reduction, they drive better controls. And I think that we will continue to see these processes bring more efficiency to the office of the CFO. And we'll get into this in a little bit more detail. Not just in the interest of time, we'll focus on a subset of the processes to really highlight why we have confidence in these trends. The second, if it's not obvious and should be on everybody's mind, is AI, and in particular this notion of generative conversational AI that is taking the world by storm. We believe that it is going to be increasingly ubiquitous. At the same time, there are people always going to be asking questions about like, how do I use it? In some ways, it is so all-encompassing that you can do a lot of things with it. And because you can do a lot of things with it, it can be very confusing about where to start. And we'll try to provide some discussion and guidance on where we think that some of the best opportunities are in general terms, right? But I personally, and I think that Yash and I will talk about this a little bit later, think that some of the greatest opportunities for AI and Gen AI come from gleaning insights that are not obvious, being able to use this to drive better corporate performance. The flip side of it is, of course, that there are some mundane things that AI can do, And those are also like valuable, but to truly take advantage of Gen AI, we think that some of the areas in which the office of the CFO can benefit is by generating insights and improving corporate performance. We'll spend more time on this. The third area is payments optimization. We have seen, obviously, some of the critical things that happen in the finance function is the intake of payments relating to receivables and the disbursement of payments relating to payables. It's a critical function. And, I think a lot of times we don't sort of really think about why it's important, what are the modalities that we use, and how they can impact things like cash and cash flow. And what we'll see is that over the last 15 years, just as an example, both on AP and AR, the volume of check payments has been steadily going down. But the risk associated with checks have been steadily going up. If there's nothing else that comes out of this session today, what we hope we'll see is the desire on the parts of people to really kind of drive more payments to digital means, because it has an impact both on your cash flow, your working capital, as well as the risk associated with it. And so the digitization of checks as well as the speed of settlement are both impacts that we think are going to be very significant, to businesses. And speaking of risks, fraudsters are very much vested in driving their own revenues. That's how they see their business. While we might see fraud control as a cost, it should be pretty obvious that fraudsters see what they do as revenue. And obviously they invest creative thought, they invest resources, and it's amazing to me what some of the schemes are that are sort of developing in this kind of world of B2B payments and sort of the enterprise and how that's happening. But fraud is only one type of risk. It was barely 2 years ago that we were all sort of witnessing the slow death of Silicon Valley Bank. We put our money in banks. Businesses keep money in banks, and kind of one thing that hasn't changed is that the FDIC limit, insurance limit, is still $250,000. And I'm pretty sure that most of you here have more than $250,000 in deposits in the bank. I don't think that people have fundamentally kind of internalized this notion that banks take risks just like we take risks. And those risks can translate into really bad things happening. And so that's the second kind of risk that I think that needs to be really kind of dealt with. And the third is the idea that, we do business with, in order to do business, we have relationships with suppliers, and we have relationships with customers. And there are risks associated with those relationships. And I think it's important for us to really highlight the fact that counterparty risk is something that, everybody needs to care about. And especially in the context of the fact that some of these counterparty risks have been elevated because, shockingly, some of these counterparties are, believe it or not, fraudsters. And so we'll spend some time on that too. So this is kind of my perspective. And Yash, I just been talking a lot. I wanted to sort of, throw this over to you and let me know what you think.
I think, yeah, two areas that are, very close to what we do and very close to what problems we solve is around how businesses can become more efficient, control costs, at the same time be ready for what AI can do, right? I think those are two topics that I'm personally very, very excited about. It's also an area of expertise. So I think in this sort of session we have sort of a balance of on the payment side, on the risk management side, you obviously have a lot more sort of expertise but on the efficiency, cost control, and especially how you can operationalize the use of AI in day-to-day stuff, right? I think those are things that we can definitely sort of talk about. So yeah, excited about digging in.
All right. So what I wanted to do is to spend the next 5 minutes or so stepping back for a second and saying like, okay, these are all obvious, right, at some level. But why are they obvious? Why is it that we have conviction that these are 4 areas and trends that we think that are going to play out in the course of the next year, perhaps more. So let's start by saying that, there have been massive investments that are being made in technology that drive these trends in the office of the CFO. I want to give us all a view into what these investments are and the scale of these investments as well. So number one is that, there are like something like 500 or $500 billion that capital market investors have put into B2B fintechs over the last 15 years. So if you look at this graph on the right, you can see since 2013 or so, the scale, the rate at which that those investments have gone up. Certainly, there's been a little bit of a drop off or significant drop off, depending upon your perspective, in investments in fintech companies, right? When I say investments in fintech companies, I'm talking about private equity, growth equity, venture capitalists, public markets, all basically plowing their own capital and confidence into these companies. The drop off was obviously post COVID, but what you'll see, what's interesting about this is that even post COVID, B2B fintech investments were more resilient. They didn't drop off as dramatically. It's not obvious in this particular graph, but trust me, that's sort of really is a testimony to the fact that these kind of investments are helping move these trends forward. The second is that the investments are really kind of helping people probably in attendance on this webinar more than anybody else. It's more small and mid-size focused fintechs that are bringing really new innovative solutions to the market, but also very importantly, not only capabilities, but also packaged in a way that make these solutions very, very accessible to smaller businesses. And we'll spend some more time on it. The point is that these investments have impacted just about every aspect of the financial process within the office of the CFO. This is a very important consideration. If you think about what happens within the office of the CFO, these are the different processes that just about every business runs, right? It's tax compliance, payroll management, treasury solutions, cash flow forecasting and cash flow management, purchase control, AP, T&E, and so on and so forth. Historically, once again, these are processes that have been mostly manual, but in the last 5, 10, 15 years, many of these processes have some remarkably sophisticated solutions that bring efficiency, cost control, and so forth, to the mix. And as we look at AI, we think that all of that is going to get kicked up a notch, and these solutions are sort of going to get more approachable, more capable, and really kind of it's a wonderful thing to sort of behold and witness and be in the middle of as we sort of see the world progressing forward. So these investments have impacted every financial process. The result is that investors are sort of really reviewing the collection of software that I just highlighted in the previous slide as the Office of the CFO software, right? It's now a category. Previously we might have thought about like, hey, AP automation is a category, or AR automation is a category, or T&E is a category, or so on and so forth. Yes, they're all subcategories. What we're increasingly seeing is that more and more and more companies are creating one-stop solutions, all-in-one solutions that bring together many of these components on one platform. The benefit of doing so is obvious, right? One, the benefit of having everything on one platform makes it easy to purchase. It makes it easy to use because now you have one infrastructure that does those things. It makes it easy to hold your vendors accountable. And so that's the sort of second trend that we're seeing take place in this, which is that all of these hitherto disparate solutions are starting to become consolidated under one platform so that they can become more efficient from a purchasing standpoint. And certainly for the purveyors of these solutions, they become easy to sell as well. Again, the highlight here is that this is a $180 billion addressable market, growing at about 15% year over year. So these are not investments that are going to go away anytime soon. We're just going to see like huge amounts of like these trends that I talked about, all moving the market in this direction. What we want to do is today and use this really more as an example because we don't have the time or necessarily the expertise to talk about all of the different components that make up the Office of the CFO software. But what we do want to do is to highlight a subset of this which relates to one of the most critical processes or exercises or operations that take place within the office of the CFO, which is cash management. Later on, we'll talk about this in more detail, but what I wanted to do today is to just really highlight the fact that when you think about cash management, it can be it can be sort of boiled down into a set of related interconnected operational processes. How much cash do you have? How long is it going to last? How do I run my AR so that I can short my DSO to improve my working capital? Conversely, how do I run my AP so that I can extend my days payables outstanding and lengthen my and shore up my working capital? When can I get credit if it turns out that I can't solve my working capital problem? And T&E, of course, is an important element of making sure that you ensure that people who are spending have the ability to automate those processes as well. So we'll spend more time on each of these things a little later on, but what we're going to do is to jump right into this as an example to then going to why these trends are really, really important. Okay. So what are the drivers of prediction? So number one is AI, right? We'll just get right to it. This is a topic that is not going to go away off the headlines and the front pages of your favorite journal. Let me turn it over to you, Yash, and you tell me, right? You've got some thoughts on this. What is your perspective on how these financial processes and the office of the CFO can benefit from AI?
Right. I think it's sort of important to understand where we are in sort of moment of history, right? There's a lot changing in front of our eyes, and the core definition of software is changing in front of our eyes. So if you just back it up, there was a time where digitization, just moving records onto a computer was automation, right? That was, call it era number one. Then there was put everything online and you can access it from anywhere, era two. Now you can access it from the phone, mobile era, right? But fundamentally, it put people at the center where software was used as a tool that people managed, people worked on it, right? Today, in front of our eyes, we are seeing software created or AI that is helping people actually do the work. I think that's the era we are entering. And for doing that, to actually get there, there are three things that are going to be super important: data, contextual, sort of information that you can use to actually apply and solve a process, right? I think that's actually what is going to help in this sort of world that we are sort of entering, right? And there are low-hanging fruits. There are tasks that are repetitive, manual, that humans shouldn't be doing. Those are the first ones to actually get automated. But the richer one here and the more valuable aspect is, how do you unlock insights from data? How do you actually use data, right? How do you use that in a manner that is actionable and actionable all the time, right? And I think that is the most crucial role that AI will sort of play in this era, which is unlocking value from data, providing insights, and generating better outcomes, for the office of CFO. Where I had a CFO client of ours tell us that, look, AI is not going to replace people. We should not be thinking about AI as the enemy. It's actually the other way around. It is people who use AI will replace people who don't use AI, right? It's almost a way to say, look, earlier, if bringing in a computer was a competitive advantage, this era is going to be determined by what is the extent of AI you're going to use within your enterprise to unlock value and to actually build better business outcomes for your company, right? I think that's at a very high level what we're seeing. But yeah,
I'd like to challenge you, because that's who we are. We challenge each other on this idea that AI is not going to replace people. It is. I mean, we need to be very clear about this, that there are certain things that we might have depended upon people to do that now can be done with AI, with Gen AI. I think it's important, right? I think that I want to just sort of wax poetic here for just a minute, right? There's some of you may have known this a mathematician named Alan Turing from, he's now passed away. But Alan Turing is sort of considered one of the godfathers of AI from the 1950s. And he many years ago proposed this thing called the Turing test, or what has come to be called the Turing test. He didn't name it after himself. But the Turing test basically says that, AI will have come of age, and I'm paraphrasing here, when a computer can do something, when what a computer does is indistinguishable from the same task being done by a human being. And for years and years and years and years, of course, that was always the holy grail that, the Turing test, could not be passed by a computer. You had you had DeepMind that beat, Garry Kasparov at chess. That was something that happened. That was a big deal. You had, the IBM's computer win Jeopardy. That was a big deal. You're starting to see this progression. But to me, like the big deal was when the current crop, and it actually happened a short while before this, but this current crop of AI technologies that we have come to call generative AI has truly become indistinguishable from what a human can do. Not only that, it has become incredibly powerful in the sense that it performs tasks that hundreds of humans cannot do. Even hundreds of humans cannot do. So this is where we are. We're at a place where, in some ways, it's the anthropomorphization of the computer, and we can relate to what Gen AI does in the same way that we can relate to human beings. I'll say it in the following way, right? Even like in 2022, 2020, before Gen AI exploded on the scene, we would think about like computers and the use of AI and machine learning as things that helped us do rapid analyses or do complex analyses and give us take outcomes that might have taken a lot of sort of grinding to get to by as a human being. But now we can sit down and have long conversations on trivial topics, complicated topics, in the same way that we can have conversations with humans. And that to me is the big deal. And I wanted to sort of propose a few different examples, right? So if you were to think about like, let's say, since we're talking about the office of the CFO and finance, one example that I always sort of, wonder about and think about is spend management, right? So everybody has suppliers. And one of the questions that, is always interesting to ask is, what is my spend concentration, right? What percentage of my spend is being spent with a particular supplier? These are just two simple examples. And both of these questions ought to be answered by AI, by Gen AI. And it can, right? But the question really is, are you leveraging AI for these things are you gaining the maximum leverage possible by asking these questions? And I would propose that, yeah, it does the job, but it provides very little leverage over what maybe a traditional BI tool can provide, right? On the other hand, if I was to ask the same question of a Gen AI system that says, hey, what is the risk associated with my supplier? That's a pretty meaningful question to ask. And it's not something that's easy to get at by just simply looking at my GL data. I might look at some, the universe of the corpus that's out there to be able to answer that question. And that's really where I'm going, Yash, which is that on the one hand, I believe that it will, let's be clear about this, it will replace humans. It can answer questions that cannot be answered more easily by simply looking at data in the general ledger, by combining internal and external data sources. And it's truly ubiquitous in the sense that there's a broad range of things that can be asked. And I really believe that, we should be thinking about, when I say ubiquitous AI, I think we should be thinking about how AI can be used in a limitless fashion. Yeah, there's some limitations and hallucinations and performance and cost and these kinds of things, but we are at this like very fundamental point where practically anything, I'm not talking about general intelligence, but I'm talking about insights, corporate performance, right? The kinds of things that I sort of proposed relating to, suppliers can be done.
No, I completely agree. I think it can be done. I think we're heading in that direction, uh, especially in the office of CFO, where you know um, there's very little room for approximations, right? I think what we have seen so far in AI is uh, fascinating to do pattern recognition, summaries, text to speech to text transcription, voice to text, and the other way, right? Generating video. So where there's a lot of training on underlying data involved. But in the office of CFO, especially accounting, there's very little room for approximations, very little room for being 99% accurate, right? So I think a large part of AI, at least what we are seeing is, if you can get data to the people who are accountable for it faster, can you verify that better? Can you verify that in more real time? Can you actually get that data in real time and process it in real time? And all of this can be done by different types of AI agents, right? I think that will be the first wave of how it can be immediately adopted in the office of CFO. Second part of it is, for any valuable insights, your underlying data and the data model needs to be accurate, right? And that truly becomes the next sort of layer of how you can generate actionable insights, continuous, insights. I would go on to say that in the next few years, you will not have like a BI tool, but you'll have like it's almost like if you're a fan of Marvel, you'll have like a Jarvis who will be talking to you and say, hey, you know what, this is what is going on, right? It is not far. But for that to happen, the underlying data, and the data sources and the data plumbing also needs to be really, really accurate. And I think that will unlock a tremendous amount of value. And then that's one of the things that we are sort of seeing.
Are you, so again, I mean, I think we can stay on this topic for the next 16 hours, but we don't have 16 hours to spend. I'll just ask you, basically, you sound like you're not quite a believer yet.
I wouldn't say I'm not a believer, but I feel that especially in core accounting areas, it's not gotten to a point where you can say, there are hallucinations, but at the same time, it doesn't give you 100% accurate results yet, right? And especially when you want to do month-end close, you want to do reconciliation, it has to get there. So
it depends on your perspective. It depends upon what you're asking, right? That's the whole thing, is that, humans make mistakes too. And the question is, who is more fallible? It's one thing to say that, humans are infallible, which they're not. And the question is, in relative terms, what are you willing to accept?
right.
And the other thing is that not everything that happens in the office of the CFO is accounting. Risk management is not accounting. Competitive analysis or understanding counterparty risk is not accounting. There's a bunch of things that happen, like, for example, in our product, not to turn this into a discussion of our own product, but, in our accounts payable automation solution, we ingest invoices, capture data off of those invoices, and code the line items in a pretty accurate fashion. And the question is, what is accurate? What is the benchmark for accuracy, right?
Right.
If you're doing this manually, it might take you several hours to code an invoice, and you might still make some mistakes. But if you're doing it using AI, it might take you a few seconds, and you might be willing to tolerate 5% error rate. So I think my point, and I want to sort of really turn to a couple of different other areas as well, which is that not everything is accounting, right? Shockingly. And there are some areas of application within the office of the CFO that do require human intelligence that can be fallible. And that's where the breadth of capabilities that are offered by solutions, by the large language models that we have today, even out of the box, right, are breathtaking. And when you start to train them using products like Hugging Face to create your own large language models, it just becomes amazing. But my point is this, the takeaway is this, and I hope you agree with this, the takeaway for us on this topic is that you can't run from it, right? And you will ignore this at your peril. And even if you don't believe it, you should try it, because you will naturally follow where the water is flowing to find the place that best suits what your needs are.
Absolutely. I think the best way to gain exposure is to try, solutions that are incorporating AI into each of these sort of problems, or how these problems are being solved. And the beauty of it is, it can be delivered in a fairly cost-effective manner.
Exactly.
You can try it out and uh, see how much, there's this balance of efficiency, accuracy. Those are things that are still getting done, right? I mean, I am a believer, but I still feel that there is a ton of room for us to grow and build. And as entrepreneurs, that's what we are most excited about, right? The opportunity to build solutions that truly solve the problem, that people have always been, sort of struggling with.
And while I think we have a poll here, should I be advancing the slide, or
You
Ali?
don't have to. I figured people could start responding while you're talking about it.
And
The
and
questions.
and while while
uh,
while this poll is up, you say this is above your pay grade. It's not above your pay grade. I think that I know, and we're not talking about like, well, we're not necessarily um, uh, you know I don't think you're an accountant, but you do use AI today, and you weigh in, right? I mean, I think there are
yeah.
things that you do in marketing at Centime that like have made a huge difference.
Yeah. So if you missed my comment in the chat, I was saying that, I'm a marketer, so far from me to tell CFOs what to do, but I think, CFOs probably should be challenging other departments to be at least exploring what they can be doing, what they could use AI to potentially get more effective in other departments. So marketing, I think, is really one that's leading the charge here. Content creation is an obvious, easy way to start adopting AI. And so if you haven't asked your marketing team yet what they're doing here, it would be a great conversation to start and just try to understand, are we at least exploring, experimenting, and seeing what's possible? I have a case study that if anyone's interested in it, you can chat me, that HubSpot did on our team on how we are, managing a very small marketing team and keeping it leaner than I've ever seen by adopting AI into our processes. And, CFOs should definitely be leading the charge and challenging other departments in that way. That was my thought.
And I think that, I just like we'll move on to the next sort of, trend/prediction, but I'll just say, like, there are some obvious things that go outside. And I take your point, Yash, that, obviously you don't want to be screwing around with, AI if it turns out the results are, mess up your balance sheet or your income statement, but there are certain areas like cash forecasting, for example, where AI cash forecasting by definition is never going to be perfect, right? There are too many variables that cause that to be imperfect by nature. But the idea of using AI to create a cash forecast is something that, should be done, because at least in my experience, most businesses don't do a very good job of cash forecasting if they do it at all. uh, you know, understanding cash planning. When should I pay a bill? What is the impact of paying that bill? Which receivable and which collection should I go after? Because that's going to have an impact on my cash. There are a number of different areas like that that I think that are sort of outside of the core principles of, balancing the books, so to speak, or month-end close that, can be really, really, really helpful. We probably should move on. Like I said, we can be here forever talking about this stuff.
Yeah, I mean,
Again, folks,
I'm surprised that the poll results show that there's like interest right now from the audience in exploring solutions for AI. It seems like very few have already adopted, but most are interested. So not a big surprise, in line with, why you're here today. So thanks for responding. Appreciate it.
yeah. So the second um, thing that we wanted to kind of talk about here is automation. As we said, like there are literally about 20 different processes that are run within the office of the CFO, whether it's AP, AR, cash forecasting, T&E management, and so on and so forth. And historically, many of these processes are done manually. And somewhat surprisingly, even payroll, right, which you think of as mostly automated, I saw a statistic the other day that something like 60% of companies have automated payroll. Said another way, 40% of companies still do payroll manually, which is shocking to me. But in other areas like in accounts payable automation, accounts receivable automation, these are areas that are ripe for automation because they drive efficiency. So the point is that in the spirit of talking about the trend, we think that things like T&E and AP are ripe for for automation because they drive immediate efficiency and cost reduction. So I wanted to sort of share with you some data that we pulled. Guess where this came from, by the way? Uh, this sort of summary analysis came from ChatGPT. I went to ChatGPT and said, like, hey, highlight for me in quantitative terms the top benefits of automating T&E management. Well, I got these 6 bullets, which I don't think that this is junk, right? You can always and you can speak to this, Yash, and you tell me whether or not we've got this right or whether ChatGPT got this right.
I think both these processes have one thing in common, right? A ton of repetitive manual tasks, which start from chasing people, getting the right data in, filling up spreadsheets and spreadsheets. Even if you're using software, a lot of the data that goes into the software, if it's people dependent, it takes time, right? So I'm not surprised at these numbers at all, but I actually feel the value for this, at a per SME, per mid-sized company, is actually a lot more incremental. This is theoretical, but if they actually see where teams are actually spending time, ranging from chasing people to checking statements to matching whatever, doing two-way, three-way PO matching to figuring out which vendor to pay when, or reconciling credit card statements to receipts that they have to chase from employees, and finally trying to balance these books, and whether it's QuickBooks or Intact or NetSuite, it is a ton of time that is being spent on non-core activities, right? And that is one area where I think technology and whether it's AI, non-AI, can basically push that and make them so much more efficient. And you can start realizing that value very, very quickly, right? I think that itself is, if your processes are not not, I would say optimized, right? This is the time, because once you do that is when you can go the next level to say how AI can play a much bigger role from there. Get your data in place, get it faster, get it right, get it more accurate. Remove people from that equation. When I say people, remove people chasing, remove people following up, remove people correcting. There's no value in people looking at an invoice and entering what's there on the invoice on a spreadsheet. There's absolutely no value in that, right? And people hate it, right? So get processes that people hate out of the way, automate that, so you can unlock a ton of value from generating insights, from that data. So I think that to me is the bigger point, of how automation can benefit.
Let me ask you 2 questions, Yash. I think both of us have been doing this for a long time. And, it's sort of, I have 2 questions, or one question, one statement. In all the years that you've been doing this, why do people resist this? I mean, the reality is that, I saw a statistic the other day that, like I told you about payroll, but and then, you're more of an expert on the T&E side. In the AP world, I saw a statistic that, less than 10% of companies in the middle market have automated accounts payable.
Yeah.
That's shocking to me. And I don't understand why that's the case.
I have a theory on this, right? And this is something that, we ask 2 questions to customers: why and why now, right? And a lot of time, they come to us because of specific sort of trigger points, right? Something bad happened, them realizing that they're spending too much time, hence money. But one of the things that, they take away from, a discussion with Fyle is, look, I didn't know such a thing existed, right? So I think the awareness aspect of it is truly real, right? And I think uh, we are entering a phase where people are discovering solutions. People are discovering solutions also on a, you know, um, basis where they are either talking to others who have, solved those problems. They are listening to people, they're listening to case studies. So there is a ton of information, but you actually don't know which information to actually trust as well, right? So I think that also there's an information overload aspect. So when you actually make a Google search, I mean, you can do it right now, go and search expense management, you'll probably see 15 paid results on the top and then some information in the bottom. That's how information is structured today, right? And when we ask them, what made you come here? What do you want to solve, right? They come with ton of credit card statements, credit card transactions, people not turning in receipts sometime. Again, I'm contextualizing for expense management, and you can do that for AP. But
Yep.
the fact is that they use credit cards, provided by banks. They have, multiple card programs because they use it as credit lines, and they have ton of transactions, and people scattered all over the place. And nobody likes submitting expense reports. Nobody likes submitting receipts on time. It is manual, right? So and when you put a appless function or an appless way of turning that in, they can simply text receipts to Fyle. That's it, right? That is what the 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 delta in what they need to learn is what excites them. There's zero learning curve, right? So I think the
Yeah.
resistance came from, if I invest, will I still have to do a bunch of things that I still do the heavy lifting versus what do I do? So that's
So
that's
there, yeah, sorry to interrupt you, but I think of like, the kind of, resistance or there's always a fear of change. I think people are comfortable with processes that they follow, even if they happen to be manual. There's a fear of change, I imagine, is sort of one of the resistance. There's a kind of, lack of trust you mentioned. I think that we need to put that on the table. I run a certain process, my process runs a certain way. I'm just really not sure whether this particular software is actually going to do it or not. And
right.
a subtext to that is we're in this kind of really weird world where, people are not trusting of the sales process. And like they simply don't trust what salespeople are saying to them. And so there's that sort of reticence to actually engage in the sales process, to actually listen to what it is that people need to hear to convince themselves that they can get this benefit, right? And then, I think that I think that there's also the sort of maturity of the market. I think we're not sort of quite there. Some solutions perhaps are more mature. Payroll might be more mature. T&E might be more mature. AP, AR are still sort of maturing in the marketplace as we stand today. And then these are some of the factors I think that give people pause is the way I think about it. But again, it's a little bit like AI. Anything you do is going to give you pause. Anything that you face is going to give you pause. But if you don't do it, especially given these sort of really compelling, benefits, if you don't do it, you'll never get there. And so, I think that, there are so-called early adopters that will go headlong, and there are the early majority that basically are looking for more proof points before they sort of, really dive in. I think my point is that bringing it back to the predictions and the trends, I feel like this is the year when we'll start to see the early majority really rise to, adopting solutions in that sort of, the office of the CFO suite, and not just T&E, not just AP, other solutions like, close management, purchase control, things like that.
I think we have
But
another.
yeah, go ahead.
I went
Nicole.
ahead and launched the poll so that we can kind of hear from the audience about, where they're at on that adoption curve. So far, what I'm seeing is, a good mix. Like there's a lot of paper invoices and paper receipts still out there, but people are adopting technology too. So we're, like you said, in the beginning of this adoption curve.
Yep. So let's move on to topic number 3, which is payment optimization. Now, you know, the office of the CFO is rife with critical business processes. Um, Payments professionals at banks and geeks like us think about, like, payments all the time. But the reality is that, there are things that my view is that, there are advances taking place in the world of payments that folks in the office of the CFO will start paying attention to, because they have a real impact to, how they think about their working capital and the risk associated with it. So basically, the way I think about it is that the two opportunities are relating to digitizing payments and reducing settlement times. Let me flash up one slide and then we'll have this discussion, right? So when I think about, like, this sort of chart on the right is a remarkable chart that highlights, why, everybody needs to pay attention to why they're still making check payments. So basically, the Association of Finance Professionals, which is an organization that uh, businesses are members of, tracks uh, does payment surveys every few years, every 3 years or 4 years. And the blue line shows you the result of the percentage of payments that are being made, vendor payments, supplier payments that are being made by businesses over the course of time, right? Percentage of payments being made by paper check. It's gone from about 80% to just below about 38% or so in the most recent survey, which was done in 2022. But the red line tells you that despite that, there's been this sort of fairly dramatic increase in check fraud. It's shocking to me, like, how much more check fraud there has been, in the last few years, and how creative people are getting with this stuff. And so, if there's nothing else, this chart should be an indication of why, like, everybody needs to really double down on this idea that, you just have to, like, commit to removing checks from your operation. And that might be, the required adoption of technology, but, that's just the reality of it. The second point I want to make is that payments are getting ever faster. Again, like, not to geek out on you guys, but some years ago, 4 or 5 years ago, the Federal Reserve Bank started an initiative to basically make payments in the United States real time. Shockingly, our payment systems are antiquated, and even ACH, as you know, takes 2 or 3 days to settle from the time that I initiate a payment to the time that the payment ends up at my supplier's bank account can be 3 days. A variety of reasons why that happens, but that's just the way it has been for a long time. Those 3 days, by the way, are 3 days that you don't have access to your capital. Or said another way, if you were able to hang on to your cash for 3 more days in the interest rate environment that we are in, that's meaningful. And especially if you're looking at about 10, 20, 30, $40 million of annual spend, you can do the math. You realize that there's sort of meaningful benefit that you get from having the cash sitting in your own bank account. And so as payments get faster, that opportunity really becomes, really, really, really meaningful and beneficial. So that has happened in a couple of ways. Of course, same day ACH is the NACHA company organization, created sort of what they call same day settlement windows, wherein under certain circumstances that supplier payment actually settles on the same day. But where we are is really much more around real-time payments. Real-time payments, which are a reality in just about every part of the world except the United States, are going to, come to fruition. But in our own typical fashion, because of how we're governed and how these things sort of trundle along, it's going to take a few more years before real-time payments become ubiquitous. But trust me, it is coming. And the real benefit of digitizing payments is to move to faster payments and to eliminate check fraud so that you can get the benefit of reducing risk as well as improving your own working capital and benefiting from it. Thoughts, comments, feedback in your world, Yash? How do you see? Now, like most of the customers in your world are, it seems to me that, like, the primary modality is credit card, isn't it?
That's right. I think we, sort of tend to work with companies who are not in tech, right? Construction companies, nonprofits, real world, sort of businesses that have a ton of, travel related spend, some kind of supplier spend as well. And they use credit cards actually as a source of credit, right? Which is also why they have multiple card programs, right? And especially if you look at the small business card program, which fundamentally underwrites the business owner. Um, it is, you have employees using that small business card for making payments towards T&E, towards, certain, especially in case of construction, construction equipment, uh, paying for specific projects. And a delay in collecting that information is actually delay in them getting paid, because especially in these industries, service-based industries, what we've seen is about a third of these expenses that people put on their credit cards are actually charged back to a client. So if you don't collect that information in time, you don't get paid faster, right? And that cycle sort of continues, right? So in our world, I think payments, we're seeing emergence of virtual card instruments, which actually help control costs, control fraud, faster reconciliation, more and more automated reconciliation, especially when it involves locking a specific card to a merchant, locking a specific card to a category, right? So those are some of the payment orchestration or payment optimization instruments we are seeing, but all connected to their existing card program. And we're all about sort of bringing your own card. We don't have our own card. So whatever cards customers already have, we tend to work with that, right? And that's something that we are seeing. But yeah, I was, the first time I saw this chart, it just blew my mind, which is, just the first thing that came into my head was Catch Me If You Can movie, right? I mean, we are in
Well,
2025 and we're referencing a movie that came 20 years ago,
mhm,
and we're still
exactly.
talking about check fraud. So
It's just shocking. I think your point is the right one, right? Which is that, T&E processes are stellar examples of where, that payment digitization has already happened. And
right.
all the benefits of using cards or, pay by bank or whatever it is that happens to be, really can accrue. Ali, I realized that I've not been keeping track of time. How are we doing? I think we should be moving along here, right?
Yeah, we should. Do you mind if I quickly flash the final slide, and then that way anybody who has to drop, they can, but we can kind of continue the conversation for those that can't stick around?
That's good. Yeah.
Okay, yeah. So if you'll just run to that final slide, I would just point out that if you're interested in getting a demo of Centime and Fyle, that is available to you. I'm going to put out a poll right now to make it really easy on you. If you're interested in getting a demo of one or both, you can indicate here in the poll, or you can go to centime.com/demo, and we'd be happy to take you through kind of how AI and automation can potentially help your finance team get ahead in 2025 with our solutions. So please respond to that if you're interested, and I'll let you kind of wrap up with whatever closing thoughts you want to, BC.
Or continue for the next 2 hours, as the case may be.
I know it's like 1 o'clock in the morning for you, so, but if you're good, I'm good.
Yeah, I think again, like, I just in the interest of sort of, if people can hang around, like, there's one more topic that I wanted to get to, and then just really, then we can wrap up. So, it's always like, risk management. The fourth trend, I think that people ought to be paying attention to and sort of doing something about, which I think you'll see more and more and more of, both on the control side as well as the risk side, is, bank failure risk, fraud mitigation, and counterparty risk. So, I always like to tell the story of the sort of boiling frog, and many of you are probably familiar with the boiling frog fable, right? The story goes that, and trust me, no frogs were hurt in the creation of this slide. But the story goes that if you put a frog in warm water or a pot of cold water and then slowly heat up the water, it doesn't detect the fact that it's heating up and sort of basically explodes. It doesn't happen. That is not true. But it is what is true is basically how this is how we think about risk generally. Hey, human beings are trusting. And when we're trusting, we tend to trust things around us, and we trust that bad things are not going to happen. And so we don't necessarily have the controls that are necessary. We don't detect or pay attention to, maybe it's the Kubler-Ross phenomenon. We're in denial about risk. Even, when there's explosive loss, sometimes we are still hopeful. But, more often than not, we see that some of these things can sort of cause catastrophic failure. Sometimes people can recover from those losses, sometimes they don't. We've seen big businesses, really sort of suffer, and small businesses sort of go out of business as well. But the point is that there are existential risks that we face all the time. There's internal and external fraud. And again, like, not to sound like repetitive here, but the processes that we talked about, automation in these processes, typically these are solutions that all have controls in place. T&E solutions really have, implement policies that, mitigate the risk of employees doing bad things. AP solutions have policies and controls in place that mitigate the risk of spurious invoices or bad payments. It's really important to consider. Uh, we don't have time. We've run out of time to really cover this in some depth, but I think it's kind of the people kind of have what we have found is that in the wake of Silicon Valley Bank, there was a flight of capital from small banks to big banks. And that was sort of most people's strategy to say, you know what, my capital is at risk. I'm going to move it to JP Morgan Chase, and that way it'll be safe. Well, it's not. JP Morgan also takes risks. And I think there are many ways in which businesses can think about how to diversify their accounts, either actually or virtually, to ensure that they mitigate the risk of bank failure. Counterparty risks, right? I think I want to sort of, tell you a story here that happened to us, a couple of weeks ago. We kind of, had a customer that was very keen on signing up to use our product. And hey, we're excited to bring customers on. Who isn't? And he went through the onboarding process really quickly, connected his general ledger, and my customer success team, which tends to be very diligent and watchful about these sorts of things, discovered that his general ledger was hokey. The weird kind of invoices in there. All invoices had round numbers, and there were not that many. And so, the intention, I guess this guy's intention was to uh, connect a bunch of bank accounts that he had information about, and then use us to sort of disperse the funds somehow. But the point is that counterparty risks are real. You have fake customers, you have fake suppliers, and it's really important to be very diligent about like doing what's necessary to mitigate that risk. I mean, fraud stories are always fun to do. Again, we've run out of time. Any last thoughts here, Yash, before we wrap up with one last thing?
No, I think we're entering 2025, and my hope and wish is the CFO's office sort of takes a very sort of keen look at all the repetitive, boring human, human sort of tasks that people spend a lot of time doing. They take that, and that sort of becomes history, in the next sort of few quarters, because that really unlocks a ton of value, back to the company. And uh, that to me is the single biggest opportunity today, with the office of CFO, right, where they can add that as a base and then unlock value with AI and insights and continuous sort of insights that come in from that data. So I think for me, 2025 is exciting. At the same time, a lot of new things, happening, a lot of changes happening with the kind of softwares that are coming out. So yeah, I think 2025 and beyond is going to be super, super exciting.
And these are, again, to wrap up, right? These are the things that we see as trends, predictions, continuous, like, improvements taking place on processes, the adoption of AI more ubiquitously, payments, and so forth. And one last question that somebody is asking: what are the facts behind the CFO stack consolidation trend? I think the reality is that what we're seeing is the investment is the leading indicator of the fact that people are plowing massive dollars, investors are plowing massive dollars into solutions that drive these trends. And those are the facts. The fact is that $500 billion has been invested in fintech, B2B fintechs in the last 20 years. And that's where all of that is kind of inevitably headed in this direction. So I'll just leave it there. I think that, again, I'm sorry that we took so long and ran over and so forth. But these are topics that we probably could have spent another hour on. I hope you have a chance to check out both Centime and Fyle and learn more about what we do, because needless to say, these are things that we help with. We help with process automation. We help mitigate risk. We help digitize things. We help bring AI technologies to the forefront in ways that you can really benefit.
Well said, BC. Thanks to all for taking the time, especially those of you who stuck around. We really appreciate you taking the time to learn more. As I mentioned, I'll have a link out to the recording within the next 24 hours or so. So if there's anybody in your office you'd like to share today's chat with, please feel free to pass that along. But yeah, that's it for us. Thanks, and have a great afternoon, evening, morning, wherever you're at. Have a great rest of the day. Thanks, everyone.
Thanks. Bye-bye. See you guys. Thanks, Yash. Thanks, Ali.